All right, good evening and welcome to the end of day review for today. And today is the second trading day of this week. It's a Tuesday, November 12th, and we have a lot of lesson to learn and a lot of price action, a lot of big move, and a lot of four flips today. We'll go to detail later, but that is the overview right there. And the day before the CPI or any high impact news, it will be tricky to trade. That is a understatement right there. A little bit tricky, so we have to be careful when we trade that, especially in the PM. Excuse us, in the AM. Yeah, in the AM it's always tricky because it's very high resistant liquidity run. So basically, it's very toppy in the AM. So we should avoid trade in the AM. That's the lesson we learned right there. By the way, we tomorrow at 8:30 we have the CPI data release, so it's gonna huge impact, and then we have BPI data. So basically, the big move gonna make tomorrow and Thursday and Friday. We're gonna see if gonna be a follow through day or gonna be reversed. So there's huge opportunities, a lot of opportunities tomorrow, Friday, Thursday and Friday. By the way, we are in week 46, so 6 more weeks. We're gonna close down 2024 right there. So basically, we are right here this week. So basically, we are the second week trading this of November, and we are in Q4 right there. And we have a CPI. And then at the end of the month, we're gonna have a GDP data and the PCA data. They're just the same circle. And then we just have the FOMC meeting this month, and next month we also have a FOMC meeting on 17. So right here, 17, 18. So Tuesday and Wednesday. Wow. 17, 18, Tuesday and Wednesday. Yeah, Tuesday and Wednesday. Yeah, that is 6 months, 4 and 6, 5 and 6 is. Oh, this one is 6 and 7. So Wednesday and Thursday. But for December, it's gonna be a Wednesday and Tuesday and Wednesday. Oh, a little bit different, huh? We haven't aware of that. All right, that's it for the review of the economics event or calendar. All right, now go into the charts. We're going to take a look real quick. From the overnight market, we saw the setup. Let's take a look at the overnight market. We saw the setup. All right, here's how we formulate our trade in the overnight markets. We saw the setup, right? We look under the 1 hour time frame. We see the level right here at 60.24. So you see how many times it tests from above 1, 2, 3, 4. So if it break down level, it's gonna go to 63 right here, 63.13. That I'll anticipate right there. You see that right there? So if we put a buy stop right there, if it break down level, it's gonna come to the high time frame 60 13 or the PM, the New York PM right there on a 15-minute time frame. All right, so we don't have to wait. So we go in right away. We sort them, and we put our stop loss just 1 hour 60.31 and a target right there at that level. I think after that we move to the 13 level right there. Move the target a little bit. And actually the target hit, but the problem is that when we go in at what time we go in? Yeah, we go in at 22:30, right? 22:30. So we're going around right here, mid level. And it hit our stop loss before it go down to the targets. How beautiful is that? So we learn our lesson, right? Stop loss at 61. We put a note right there, 61.30, 31, 60.31 right there. We should put a stop loss at the high of the New York PM section right there. Then for sure it's gonna hit this this low. Keep in mind this level right here, the 63.33 is the key level for when we go into the charts at 9:30. You see this key level play a critical role again for another sale. So basically we read right. We read the price action right in the overnight market. But you know we need to put a stop loss a little bit higher. So basically our stop loss is 31. We should put a 33, two more point right there, and then let it hit. You know, it will hit the target. Yeah, target at 60.13 right there. Yeah, all right. Yes, so that's how we formulate. Because we look at the daily time frame, you see that it's gonna hit that level at 60.50 right there, right? Because this is it's Tuesday, it's Monday, Friday. This is the Thursday. Thursday high, we see that the Friday break that, and the Monday is almost Thursday, but it does. So definitely the Tuesday gonna tap into that level, and it did. Yeah, it did. It did an overnight markets actually. Yeah, overnight or pre-market, right after London, it rated London low, and also it rated the New York PM. So that's the whole idea right there. So that's our first trade right there. Beautiful idea. We just learned that we need to execute better. So that's the first trade. Okay, so now go into the charts for today. You see that is pattern is we saw that pattern before. Basically is a UDA swing, one single UDA swing at 9:30, and then it reversed. But the UDA swing at 9:30 in this case is not so clear, so a little bit caught up guard. Yeah, so you have 9:30 right there, right? So we rewind the tape right here, the recording. So you see the 9:30 right there. Right, actually it's 43. So 2 more minutes it will finish. Okay, let's go to 50, 54, 55. All right. So 9:30, 45. So that means it finished the candle at 9:30. So what do we see right here? Well, in the pre-markets, here's what we see. So you see our analysis right there. So we take, at 8:13, right? So basically we have this a expansion, a neckline down, and then we have retracement, and then we have the whole Asia we saw is like consolidation, and then in the London is it kind of expansion right there in the Dow, but you can call it right here expansion and then reverse right here, or expansion, which is not like down, and it did rate the New York PM right there, and then right here it's gonna be a retracement. After this retracement, you have three possibilities right there. It either gonna be expansion, right, the neckline down right here, or it's gonna be a reversal, we just go and take out this high. It will not go to consolidation because we just have come out consolidation right there. And I would anticipate, right, when it go into the 930, you see that it's expansion. You see the 930, it did expansion. It did expansion. You see that it did go to reversal right here. Right, it's a retracement and it turned into reversal. So it go with this. It did not go to the neckline down yet. It go to reversal right here. It's reversal, which is take out the high of this swing right there. So if we look at the 930, we see that is a reversal. So basically you have consolidation, expansion, and reversal right here. And right here we can play a scenario right here. It's gonna be retracement or reversal from here. That's our idea. So right here is 930, one single swing, and it reversed. Yes, it reversed. It reversed. You can see that. Yeah, as soon as it rate the London high and New York PM, they start reverse. Wait for it. So 54, 6 more minutes. Three more minutes. Yeah, it looked like it's gonna it looked like it's gonna rally, but actually it's set up. You see right there? Yes, exact moment you have a break touch from above and it's gonna be reversed. We did take a short trade right here, and our target is right here, and it will hit this target, but we get a little bit nervous, so we exit out. That's our mistake. We get exit out early and then we try to engage a long trade. That's the the mistake we make. We should let it run. You know, we get a little bit bored, so we try to go long and we pay a huge price. We give up all again. We get right there. But if we look right there, it's a short setup. Break touch from above, and also you see it did break the buy side liquidity. So that's another confluence for to go confluence for to go long right there. I mean go short. By the way, the 930 it kind of flipped. At first we thought it gonna be, you see, yes, right. So right there, 2 minutes, we thought that it gonna be short first. you see right there, so it's break, test from above, test from, you see a break right there, so it's break and reverse, break and then reverse again. So we thought we're gonna short, but we should be patient, wait for it to flip, because this guy gonna flip, then he's gonna create because this guy happened, it's at rate London, wait for its rate the New York PM, it flip, then create a force up, then go in short. You see that? Yes. So we make mistake, we short a little bit early right here, and we get crushed right there. We learn our lesson. We need to patient wait for it rate both the London high and the New York PM, and go short them, not go long. You know, right here we thought, oh wow, it flipped right there, so go ahead and go long, and it's gonna hit this level, but it did not. It's just a short setup. You see that? Yeah, right here. Who thought that it's gonna be flip and a short setup? You see, so strong move right here, but it's just a drop. We have to learn well about liquidity. You know, trap right here. It trap people to go long, but actually it's gonna flip, and a short setup is already formation right there. Yeah, we have to learn the draw on liquidity. So 1-0 here, we did go long with chase right here also. And we thought that it's gonna hit at least right here from the previous day right there. But it did not. You see that? It flipped right away. And then boom, right there. That is a huge lesson learned for us right there. So here's the thing we learned. So basically for today is a Yuda swing, one single swing at 0930, which it rate both the New York PM and the London. All right, if look, pay attention before that, it did rate the New York PM, right? So basically a range expansion right there, expansion to the low, sell liquidity, and then expansion to the high, the buy sell liquidity, and boom, it go down, it flush. That's how it's set up right there. And look at it's 9:30, right? And you see the setup right there at 9:45, and right here is at 10 o'clock or 9:45, that matter. You're gonna see a 4 breakout. 4 breakout, reversal type 1 right there. Breaks, test from above, and reverse. Yeah, we always refer back to our playbook right there. So that is the type 1 reversal for short setups. We break, test from above, and reverse. 3-step right there. Break, test from above, and reverse. And this break, it just rate the liquidity, then boom, we're gonna flush down. So we saw this, one single swing at 9:30 pattern a lot of time, but this time a little bit different. Normally we want it to be a solid candle to the upside and to the downside. Let's see, the other instant is solid close. There's no bottom wick or no top wick right there. Yeah, here's an instant happened similar, but it took place on October 30. You see a very swift, swift at 9:30, but it's a very low resistance liquidity, so it's swing very sweet, very smooth, and then it's reversed. Right there, that's an idea of a one single swing at 9:30. Yeah, it is with both, PM low and London low. Today we see that it's with the high of the London high and New York PM. That's the difference we see, and also we see this is very low resistance liquidity, but today is very high resistance, because the way you can see that the 930 it come back and forth right there. So get ready for a really high resistance liquidity run right there for the IM. But in the PM it's much better. For IM it's very hard. It's very high resistance liquidity run right there. Yeah, that's the idea of 930 one single swing at 930. Here's another instant we have is here another instant we have in October 29th. That's the same idea. One single swing right here. You see that? All right, one single swing, it fill the gap and it hit high time frame level, and then boom, it reverse. Yeah, it reverse. That's how you see that. But yeah, exactly. Thus we put a note right here at 930. You have a bottom wick and it's very high resistance liquidity. Similar like today. Today is also very high resistance liquidity. We should put that into our note right there. Did we say that? Oh yeah. We need to put the note right there that is a high resistance liquidity in the AM. Yeah, let's put a note in there. Alright, we just put the note right there. It's a high resistance liquidity in the AM right there. And how do we know that? Look at the formation of the 930 candle. It gives us some clue right there. You see that the wick in both sides, both ends, in the top bottom. It tells us that it's gonna come down, but it's very, very tricky. It's back and forth. So if we are go short, then just stay in the trade. Don't exit the trade early. That's the idea right there. It gives us the signal beforehand already. So the 930 candle formation gives us a lot of information, whether it's a high resistance liquidity or it's going to be low resistance liquidity. You see this one? It gives it right there. But at least on this candle, it tells us that it have the long bottom wick right there. But for today, it's hang up here and it have the wick on both ends. But in any case, in this scenario, it also a high resistance liquidity right there. And it continued to run. Today, it reversed and then it reversed. That is the difference. Right? Today is reverse from here and then it's reverse from here. Here it's back-to-back reverse right there. It's very special case. Alright, so that's another instant on November, is that 29? Yeah, 30, right? We have 30, and then you have a 29 instant right there, which is one single at 9:30, and you got reverse. Let's see another instant. So another instant we have is on October the 2nd on Wednesday. So you have the same idea right there. So you have one single swing at 9:30 and reverse. And you see this swing is so smooth right there. It's just one solid down close candle. So like we mentioned earlier, the 930 candle formation tells us a lot of story. That means it will be very low resistant liquidity run right there. And it did right there. See that? It break and it reverse. So that's another instant that it's just one single US swing. Yep. Here's the last instant we take a look related to this pattern, which is one single swing at 9:30 and then it's reversed. This happened on August the 1st, on a Thursday. You see that? It rate the London and the PM, which is similar like today. After it rate, boom, it reversed. It's very similar like today. Where is our today? It's very similar like today. Yes. So this hour today right here. So it's rate. The only difference is the London did not rate the PM. But in this case, the London high did rate the PM. The Asia did rate the London high right there. But for today, it did not rate. It wait for the 9:30 to take care of that business, rate the query. So in this case, the 9:30 rate one more time, and then it create a 4 breakout with type 1 right here. Breaks, transform up, and reverse right there. So that's the phenomenal on the pattern. We see that pay attention to the 9:30, one single swing, and then it reverse. And that's exactly what happened today, right there. Yes. Watch for this. After it rate the low and then wait for rate the high and then boom, it's gonna reverse. Alright, here's the trade we take and let's see what lesson we learn. So right here is 8:20, right? Just right before 9:30. So basically we go long right here. Because we saw the level right there, test from below, so we anticipate gonna break that level. And it did. It did go up, right? That level. Here. So it go into our direction right there. And then, yeah, it go very solid into our direction at 8:50 right there. And now it go into flip, reverse, and right here we got chicken. We thought, oh wow, we thought, wow, it may flip on us, so we move to break even and think we get did we get stop out? So yeah, we take the early profit. Yeah, we take about $100 profits right there. So get our trade. We can look at that. We thought that okay, it's gonna be what right here. You see the setup is a break. Touch from above, below, break, and reverse. So we thought it's gonna reverse from here. But it's not quite yet because it will look. So it's 9:25. So go into the chart right here at 9:25. So I'll set up here. So 9:25. Is that right for today? I think we go to the wrong time frame. Okay. So 9:25 is not there, yes. 9:25 right here. No, not 9:15, right? 9:15 you're gonna go to 9:30. So 9:25 is still in this candle. It's not there yet. Right? If we look carefully, we need to wait for it break this liquidity before we can go short. See that? So this candle, we should not chase right here if we are, don't react. We need to restrain ourselves from FOMO or so knee-jerk reaction right here. Yeah, it do look like that, but it's just a trap because it not rated the liquidity rate here level yet. So wait for it rate because this one it got flipped. You see that it got flipped right there. It flipped. You thought it down. You chase right there. You see that we short with chase there, but it flipped right there. That is the lesson we learned. And you see at the 9:30, we thought, wow, this candle flipped. This guy must be expansion. So we go along and we add very big sign right there. That's a huge mistake right there. We need to wait for the 9:30 formation because you see the expansion right here. That's something it have to rate the liquidity before it change direction. So we have to wait for 9:30 formation. And the 9:30 is a very high resistance liquidity run right there. It's back and forth. And we lost a bunch right here. We thought that the 9:30 is get ready and we're gonna move. But it depends. And in some day the 9:30 going boom, it go into one direction right away. But for today, the 9:30 is very high resistance liquidity run. So we better wait for the 9:30 to formation. All right, we chase again and we get, you see that? We go in, we add side right there. But the minute we add to the side, it flip back on us. You see that? Okay. We jump too short, but look. Yeah. Yes, so we got this trade right here. We're going short right there. And we target right here at 60, 17. Perfect. And actually we can go down to 13. If you look at the chart right there, you go down to 13 right there. 60, 13 right there. You hit it. So we get a perfect trade right here. We saw the short setup, break, test from above, reverse, perfect. But we make mistake that we get early. We get out early. You see that? Wow, at one point we make this burst, and that's the reason we need, and it come back, looks scary. Come back. I think we run out of time for this video. This recording, we go to the next one. We're gonna see how this ends. So go to next video, next recording. It splits the recording. So, we are exit them. So basically we exit early right here. We don't wait until you come down here. We exit right here. Get a little bit nervous right there. But the point we try to make, and now we're going to go in, we go long. That's a mistake. We should not go long. That's the huge lesson we learn. You see that? Right here, it's at a faith flip. A minute you going long, you stop out right there. So instead of go short, let it go all the way down to the 13 for us. We have a huge run. Just keep in mind that we go in here, right? We short in there, but instead of let it run, we cut short, and now we are chase the long trade. That's the huge mistake, and we give up. You see that we give up a loss, and we try to go long again. That's a huge mistake again. Like we mentioned it before, if we let the short run, we get a huge profit. Right there, we have a short run, let it run at 13 right there. Instead of let it run, we exit the short trade early, and then we try to go long around this. At 30, you see that at 30, it make a flip right here. It's a four flip, they all four flip, and we pay heavy price. We learn a huge lesson. That's reason why it's a very high resistance liquidity in the AM. Be careful. See that? And we drag off our loss. You see that eventually it go down and hit 30. Yes, we pay for all that. And you see that? It go down hit the 13 right there. Which is exactly the source setup that we trade early. See that the source setup we trade? Right here. The source setup we trade. We aim at 17, but if we let it the 13 right there, it go down 13 for us right there. Right? Instead of staying in a trade and let it run, because we have to understand the liquidity run. Otherwise, we are just chase, get our emotional, because you see that the minute it rate the New York PM and London PM, then it gonna go down and sweep all of this buy side liquidity. I mean sell side liquidity with the low rate there. So let's just let it run. Don't worry about the fall flip right here. Yeah, that's the huge lesson learned for us right there. Huge mistake we make. All right. Okay. So right here, we did catch the move right here, because we know that when it rate this liquidity, it's gonna come back, and it come back very hard. We thought they're gonna rate the liquidity, but it did not. It just stopped right there. It just got stalled right there, but we did catch the huge move right here. We don't catch down here because we're not available at that time. But as soon as we see this move, we go in, and we did catch 3R 15-point move right there. Let's see that trade. So here, right, we catch this trade, we go long. We long right away, because we know that the huge sell side liquidity, then it gonna explode, move up, and you see that? Wow. We thought that it's gonna go up there, so we aim very high right there. But anyhow, we saw a stall right there, so we better get out. Yeah. And we make mistake right here, because we short right here perfect. Let it run. We get it nervous. We should let it run, and you see that at 12, or I mean at 3 p.m. you see right there. It gives us right here. It will let it run. We have a huge run. We have another almost 3R. 3R 50 point right there. But you know what? We get chicken because we're afraid that we're gonna get lost. You see short right there, let it run. Right? We make mistake. We in and out. You see that? You should let it run right there. We don't move our stop loss. Just leave it there. We should be fine. See that we get chicken nuggets right there, and it flip on us, and then you see that we should let it run. It's 15R right there. Yeah, that's another lesson we need to learn. Let it run. Right? Let it run. It's gonna come down. Decide it, then let it run. It's gonna be retracement. Just it is. All right, that's last lesson for today. Okay, before we leave today, we want to tell something real quick. Ready for tomorrow's CBI. Let's review to see what the CBI last time. So here's the CBI last time is October 10 on Thursday, the CBI. Right. So you have a huge bull right there, but you have the wick on both ends. So we learned the lesson that, all right, if you see the trade right there, you can go short, right? That's the setup, break test for about a short. After that, wait for the next move. You're gonna see that. You see that it fall to break the level low right there, and then it reverse back. So that is the CPI's last month. Let's look at the CPI on September. You can see another pattern similar right there. September 7 right here. So we have a September 7. Right, September 7 CPI. And you have the 8:30 right there, but the beautiful setup is happen at the 9:30, which is the huge Judah swing. See that Judah swing right there? So you catch the setup at the 9:30 Judah swing. So you don't miss anything. Yeah, that's the Judah swing at 9:30 swing, and then it reverse at 11. Yeah, you see that swing and then it reverse. Reverse right here at 11 is a full breakout reversal type 1 right at 11. All right, let's look at August so we can see what the overall pattern. All right, here's the CPI for August. Yeah, for the August, you see the CPI, the 930 is very high resistance equivalent right there. You see that? Yeah, it not look good, but let it form, and then you go from there. Similar to if fail break the low, then go long. Similar like September. Right, September. No, it's similar like October. Yes, similar like October. Let it form, and you see 5. It fell to expansion the rand on the lower end, then boom, you can go long. That's an idea. All right, thank you for your time and interest. We are grateful for this opportunity. We do what we love, and the success is coming our way. Day by day, little by little, we're getting better and better. Have a great night, and see you tomorrow at CPI data coming. Bye.